Greek officials reportedly saying Tuesday that they will miss a $1.8 billion loan payment to the IMF. Simon Smith is the chief economist at FxPro in London. Simon, how are the markets taking this news?
Well, there's barely any reaction you can see to that. There was no real expectation that they would repay that $1.5 billion back to the IMF today, given that we're seeing a referendum on the proposals that were on the table at the weekend, this coming weekend. So it, practically it just didn't make sense for them to repay whilst this debate was in the air. So in the markets, you're not really seeing any reaction. If anything, you're seeing a bit of a sort of recovery from the losses we saw yesterday, especially in some of the equity and bond markets in Europe.
Now, on Monday, we did see investors dumping some of that sovereign debt in those so-called peripherals, Eurozone countries like Italy, Portugal, and Spain. Is that continuing today?
No, we've just seen yields marginally softer in Spain and Italy, sort of 1 to 2 basis points, seeing a little bit softer in Germany as well. The big sort of interesting move yesterday, you got this huge divergence. So German yields falling, Spain and Italy rising, which is sort of the natural flight to safety reaction you'd expect. So people going to the safe haven, i.e. Germany, and underweighting those peripheral markets. But if you think where we are, even though we did see quite a move wider in those spreads between those two countries yesterday, all over 35 basis points. But if you think where we are in comparison to 2 or 3 years ago, these yields on Spain and Italy are much, much lower. So overall, the contagion risk is seen to be a lot less than was the case a couple of years ago. And naturally, we've had a lot of time to speculate and prepare and be prepared for this.
Now, in addition to that IMF loan repayment that was due today, we've also got the European bailout program expiring tonight. Is there any chance that there might be some movement there, that the Europeans will actually come in and try and make a deal with Greece ahead of that Sunday referendum?
Ball is firmly in Greece's court because, as was happening Friday, the negotiations were continuing. There's a draft on the table, and even the Greek negotiators didn't know until they saw on Twitter that the Greek PM would say, well, it's going to go to a referendum, and then everything was off the table and said, well, you've blown it, guys, and it's down to you. So I think it is very much down to Greece onto whether it wants to come back. Potentially, you could say, with its tail between its legs, to the European Commission and the IMF and the ECB. So I really don't see the creditors, the aforementioned creditors, making that first move.
So is the next event traders are going to be watching that Sunday referendum? Are they basically going to be sitting on the sidelines until then?
With regards to Greece, yes, I don't see what, beyond today's delayed, as let's call it, not default, but delayed repayment back to the IMF. I see both sides, basically stuck where they are. Greece wants to go through this referendum. We're not quite sure of the wording, etc. The EU have said, look, and even the German finance minister said if they accept the proposals, then we'll negotiate with Greece. But if they don't, then even the German officials have admitted that an exit of Greece from the Eurozone is a possibility at this point in time. So we are waiting to that, but it also depends a degree on the wording of this referendum, because regardless of the wording, most are seeing it as a sort of, even if it's not worded that way, a referendum on whether Greece wants to stay in the Eurozone and the single currency or not.
And interesting that referendum is not on Alexis Tsipras's government, but on the terms of any potential deal with the Troika. Simon Smith, chief economist at FxPro in London, thanks for your time this morning. We appreciate it. In New York, I'm Ruben Ramirez, and you're watching The Street.